Hey everybody, Mortgage Rob here. Just the day after the BC Day long weekend here in British Columbia, and many of you are getting back from your vacations, and so I thought it'd be a good time to talk about vacation home financing. My wife and I and family took a vacation earlier this year, and we got to talking about what it would take to buy a vacation home. And really, one of the things I think is a little bit of a misconception is that it's not as difficult as a lot of people may seem. There's some really good programs that are available through many lenders. CMHC and Genworth both also have very good programs, and what a lot of people are surprised about is that you don't really require a lot of equity to buy yourself a vacation home. Now, what I'm talking about is strictly like a cabin on a lake or a cabin somewhere, something on those lines where it's not in a rental pool or anything like that. That's a different type of investment. But basically, you can accomplish something like that with as little as 5% down. With the way that today's mortgage rates are, you can certainly get some very good financing that's very affordable on a monthly basis. So it could be a really good option for you. A couple things you got to keep in mind is the type of property that you're buying. Lenders classify vacation homes under two types of properties. The first one being type A properties, where that's a standard cabin that has year-round access. There's generally a central heating system in some kind of a property like that. In many cases, it'll have some form of either a well or a septic system beyond potable water, something along those lines. A type B property is a type of property that has limited seasonal access, so you can't access it year-round. It'll probably lack running water. It'll probably be more of a property that would have an outhouse or something like that. It's not to say you can't get the same type of financing, but generally there's just a little bit more of an interest rate that's charged, or a bonus to the interest rate. So that's a couple things that you need to keep in mind. When you're applying for financing on a on a vacation home, the debt servicing is generally just the most difficult part. Since there's no rental income on the property, you have to be able to qualify for that payment on your own. But in today's market, if you're buying somewhere in the neighborhood of, if you buy a property for, $100,000 to $150,000, even with 5% down and the low interest rates, I mean, your payment's not going to be any more than, $400, $500, $600 a month, depending on how long you amortize for. So, that vacation home could be a little bit closer than you expected. If you'd like to run some options past me, feel free to give me a call. See you next time.